as much as we talk about the inflow of domestic liquidity and inflows into domestic mutual funds, the total supply, if we look at both promoter exits as well as private equity selling stakes, that has actually outpaced the inflows into mutual funds by a factor of 2. In addition to that, there have been a slate of IPOs, and you talked about it earlier in your show as well. But most of these IPOs are also actually offered for sales rather than primary issuances from the companies. So there has been a big step up in supply, as we call it, in response to the pickup in demand. So I think that is a trend that will continue to play out. We see this quarter the number of IPOs slated to come to the market nearly 3 times what came in the last quarter. So that trend is visible. You are also seeing many multinational promoters selling stake in their Indian subsidiaries. There are a couple of MNCs looking to IPO their Indian subsidiaries. So there is supply coming from multiple sources.
Okay, as we wind up, Ashish, you just heard from the central bank governor about the state of the banks in India and this whole deposit loss story, right, where you're seeing deposit mobilization into the markets. What does this mean for the earnings picture of banks? Because, a lot of these banks have high foreign and institutional investor interest, right? HDFC Bank has, I think, more than 10%. Other banks are also, very heavily owned by foreign investors. Is there going to be a compromise on their earnings because of what's happening in terms of deposit growth slowing down, even though the health of the balance sheet is strengthening?
No, I think that's clearly going to be visible. You will see earnings growth for the bank slow down, both because of the fact that deposit and credit growth is going to be slower compared to the last couple of years when banks were using excess balance sheet liquidity. But also, more importantly, last few years, you had peak profitability for the banks. You had very low credit costs as banks were coming from a cycle where they had done excess provisioning. So profitability in terms of ROAs was high, both because credit costs were below normalized level, and NIMs were also higher because of the rate increases that the central bank had done. And as India also cuts rates in the coming months, that will also weigh on bank margin. So certainly earnings growth for banks will be more muted this year compared to the last 2 years.